This is going to be a short video. I just want to rant for a second. Just finished reading a recent CFA Institute survey that talked about the trust level, how many people actually trust different professionals. And it's not that shocking, but every year when I read these trust and credibility surveys, it's always frustrating. And here's what it comes out to be. What percent of people would view these different professionals as trustworthy? Guess where the advisors are? 23%. 23% of people would say financial advisors are trustworthy. CPAs, 42% of people view CPAs as trustworthy. Now, doctors are at 77, attorneys are at 29. Let me tell you why this is so frustrating. First of all, it's frustrating because this is not representative of the advisors that I work with, that I coach with, myself, my background. It's representative of too many advisors in the industry. There are unfortunately a lot that are just money hungry, just driven by closing the deal, and as a result, they probably honestly aren't that trustworthy, but that is not the majority of advisors that make it in this industry. That's the advisors that just give us a bad name. So first of all, that's the reason it's frustrating. And the second reason it's really frustrating is because the difference between these two numbers, right? 23% of the population trusts advisors, 42% trust CPAs. Now, what's the dynamic that creates? Over the years, what it has created is this mindset from financial advisors and insurance agents. They're like, you are the top of the totem pole, Mr. or Mrs. CPA. You have the client's trust. If I could just get a referral or two from you a year, my business would be so much better. Oh, will you please take a meeting with me? That drives me nuts. That is absolutely not the way to build a genuine relationship. What you have to do is realize that this is representative of an industry that is not you. This is representative of an industry that hopefully is the CPA, right? You want the CPA to be the trusted individual, and you yourself hopefully are delivering enough value to clients where you also are trusted. But you don't want to approach a CPA like they have so much to give and you're just hoping for a scrap or two. Even if people don't say that, even if advisors don't say it like that, it is a mindset issue that has been planted in us. I remember at Smith Barney in 2001, it was like the big dogs in the office got to participate in the CPA Alliance program. And that's how you knew you made it, because you finally got to work with the CPA. No, here's the deal. This is a business owner. This is a business owner, right? Even if you don't own the company or they don't own the practice, we have to have a business owner mindset, meaning we take responsibility for the results. Because if you don't have a business owner mindset, first of all, you're probably not watching this video. But second of all, what are you doing? If you're not taking responsibility for the results of your business, of your life, of the outcomes, etc. So business owner. This is how I approach the conversation. Listen, we are both business owners. Our industries have strengths and have weaknesses. Now, let's move our egos away, out of the picture, and let's have an honest conversation about those strengths and those weaknesses and figure out if my strengths actually complement your weaknesses, and if your weaknesses complement my strengths. And if so, holy cow, what do we have? We have the base of a great strategic win-win partnership. And at the end of the day, that is all you should be trying to create. Completely get rid of this idea that you're just hoping for a referral or two a year. I won't even take referrals from CPAs, but what I will do is build genuine partnerships where we are both bringing value to the table, right? And again, it has nothing to do at the end of the day with the title that's on me. It's all to do with my strengths and weaknesses of my profession, my licenses, my value as a professional, and the CPA's licenses and responsibilities and revenue generating opportunities and their value to their clients. And if by coming together, we can actually create more value for a client, then why are we fighting in the same sandbox, right? We just have to kind of, I think, have enough courage to have that honest conversation and to meet somebody else that's willing to answer some questions and open up about their strengths and their weaknesses as well. Because guess what? CPAs have tons, just like advisors. So if we focus on the fact that we're both business owners and we both have strengths and weaknesses, now all we need to do is have an honest conversation about those strengths and weaknesses and talk about, if we come together, can we better serve clients? Can we grow a more profitable, more enjoyable business? then let's explore this further. That's it. That's it at the end of the day. I'm going to include a link to that survey that I referenced below from the CFA Institute. I will include that in the description below. If you like this video, do me a favor, just hit the thumbs up. It helps the algorithms at YouTube know that people are actually watching this. And I would love to hear any feedback from what you think. Like, do these numbers sound right? Would you agree or disagree with anything I just said? And also, if you want any help in actually understanding how to approach accountants and what to say to them and how to have those honest conversations, be happy to include a link to our schedule below. Sit with you. We can do the first 45 minutes for free, no problem. If you want to engage us for consulting after that, then we'll just look at some type of training program for you. So that's it for today's video. I hope you found it helpful.